Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Eid Mubarak to you and your families. I hope you're having a wonderful days, Alhamdulillah. In today's video, I want to talk about a Dividend King that is very cheap at this point in time. This is one of those companies that I like to, I would like to call them foundational stocks. This is one of the companies that every dividend investor should have in their portfolio because it has a lower beta. They have absolutely amazing finances, which I will share with you guys in a second. They have a product that basically is in demand and so on. So I'm going to go over the company in a second, but before we do it, if you have not liked the video, please do it so already, and if you have not joined us in the Patreon account, please do it. The reason I said that is because it will cost you 15p per day, and it will actually give you access to the Discord. The Discord is a platform where a lot of brothers are sharing very good practices. You will see all the buys and sells that I'm making frequently. You will see the family portfolio. You get the dividend trackers, so you can just actually, get hold of the dividend trackers, the calendars, the stock watch list, the ETF trackers, as well as the Sharia compliant investing ebook. So inshallah, you'll gain a lot out of that, and it definitely helps the channel. Right, so before we get to all of this, I want to talk about something very quickly. The fear and greed, the CNN fear and greed is actually now fear, which is quite nice. And I mean, to be honest with you, normally we talk about, when we talk about basically stocks coming down, it's a good time. When it's basically fear, greed, and greed index is actually around here, okay, where between extreme fear and fear, is when I would like to buy more stocks. We're getting there. We're seeing a lot more companies that are undervalued. Tech is doing really well. Semiconductors is doing well. Anything to do with AI is doing an absolutely amazing job. But everything else is actually relatively okayish. So this is a good opportunity for us to look into some of the companies out there that are quite cheap. And in today's video, I found one Dividend King that I would like to share with you guys in this today's video. As always, of course, make sure you do your own research before you invest in any of these businesses. And the company we're going to talk about today is Johnson & Johnson. Johnson & Johnson has been around for a very long time. They used to have a consumer basically section, so consumer product, as well as, of course, they have the pharmaceutical side of things, and the med tech and so on. So currently it's down. For the 1 year it's down about 7%. For 1 year it's actually down about 10%. Okay, so the year to date is down about 7%, and for 1 year it's down about 10%. So we just want to have a quick look and see if this company is actually worth looking or even adding to your portfolios. Like I said to you guys before, as always, please do your own research. The company we're talking about, J&J today, Johnson & Johnson, it's been around for quite some time. They have an excellent credit rating. They're leader across all the major healthcare industries, currently trading $145 per share, EPS of 15, and it has a market cap of $350 billion, which is quite huge. It has a wide economic moat, and this is one of the reasons I like this company. It has a very low beta. Current PE is about 10. Forward PE about 13, and average for the 5-year average PE is about 17. So when we look at the 5-year average, it's quite important that you understand why we're looking at this. We're looking at how this company has been trading in the last few years. So if it's been 17 and now it's about 9 and the forward PE is about 13, so that tells us that basically it looks like it's cheap at the moment, and the sector is about 16. Basically the S&P 500 is about 24, I think 24, 25 right now. The price to free cash flow right now is about 19 for this business. So this gives us an idea of whether the company is actually undervalued or not. In terms of dividend and free cash flow, like I always say to you guys, this is a Dividend King, so they actually love basically increasing that dividend. So it's important that they also have an excellent free cash flow. So current dividend yield is about 3.3%, and you get $4.81 for every share of this company that you own. The payout ratio is 46% only, so they have room to increase if they need to. The latest increase was 4.2. The 5-year growth rate is about 6%. I've always said to you guys, 6-7% is where I look. Basically it's quite decent. Anything above that is really, really good. Next is growth is basically straight. So they have increased this dividend for 61 years. Think about this stuff that happened for the last 61 years. We have recessions, we have all sorts of things happening, but this company, between the financial basically crisis and everything else, this company basically continued increasing that dividend every single year. The dividend safety is 99%. That's the highest any company can get, and they have over $18 billion of free cash flow right now, which is quite nice. Free cash flow yield is about over 5%. Normally we're looking for anything above 3%, so it meets that criteria. And free cash flow margin of 22%, and again about 5%, 6% is what we normally look for. So looking at the free cash flow and the dividend where it is right now, I wouldn't worry about any dividend cuts anytime soon. Now, profit margin right now, we're looking at about almost 20%, operating margin of 25%, return on equity 20, almost to 4%, and return on invested capital of 22%, which is absolutely huge. Now, when it comes to total return in the last 10 years, we're looking at about 6%. And revenue, in terms of the growth side of revenue in the last 5 years, we're looking at about almost 4%, and EPS about almost 6%. Current ratio is above 1. What this means is the company has enough liquid assets, okay, they have that can cover their current liabilities. So the current liabilities is covered by the current assets basically. So anything above 1 is basically good. Now, in terms of expectations for the next couple of years, this year they're expecting basically the earnings to grow about 3%, and then after that 5% every single year. So every single year moving forward, they're expecting the earnings to grow about 5%, which is quite decent for this company. It's a huge company. They're not going to grow overnight. They're basically 20-30%. So that 5% is what we normally expect from this type of business. Current share price is $144 per share. Fair value, when basically according for Morningstar, is $164. That's about 11% discounted right now. When it comes to Simply Wall Street, they're actually saying $245 per share is where they think the price should be. That's 41% undervalued at the moment, which is absolutely huge. Now, target price for the next, basically from tip rank, is actually 174. That's 20% upside from where we are right now. Moderate buy according to them. Average price from basically Seek and Alpha is about 171. 17-18% upside from where we are, and is also a buy from them. I do agree with it, basically still a buy. Okay, so the fact that all of them agree it's a discounted right now, it's basically all four companies have, all four basically analysts have said it is actually a buy right now, and it is definitely a buy under basically in my opinion. Now, looking at from Sharia compliance side of things, as you can see here, there's no issues whatsoever, and they are buying back their own shares, which is quite nice. Now, let's have a look at the earnings expectations moving forward for this company. So if you look at the basically earnings side of things, you're looking at about 6%, 6.5%, almost the 3.5%, 5.5%, and so on for every single year for the next 4 or 5 years. When it comes to basically revenue side of it, as you can see, 4%, almost 4%, another 4. So this is what I expect from this type of business. And I really like what basically this headline here, J&J's robust portfolio and pipeline set up steady long-term growth. And I'm really genuinely, this is the reason why I like to invest this type of business. It's not a high-flying company. It's that kind of foundational stock that you would get. You'll get your dividend. You'll get your 5%, and if you leave it alone for another 5 or whatever years, I'm sure you will have enough basically decent return, at least of 10%, if not more, every single year moving forward for 7 to 10%, which is basically what you need. Of course, as in Sharia compliant, basically halal investors, it's quite hard for us to invest in the S&P 500. This might not be the S&P 500, but it also gives us the opportunity to hopefully get that 7 to 10% every single year in terms of total return. So as you know, I do own this stock in my portfolio, so I want to quickly show you just to be honest and transparent with you guys. So I am down about 5%, which is quite nice. So if you are part of our Patreon account, you would have seen me actually adding to the company in the last few weeks. And as you can see now, I used to have about 34 shares or 35, whatever it was. I've added a few shares in the last couple of days, and I will continue to add to that, inshallah. I want to get to at least a minimum of 50 shares, if not more. Now, in terms of the stock itself, how much I receive from that dividend. So because now I own 37 shares, let me show you how much actually I get. So I get about £121 per year from this company for those 37 shares that I own. So I'm going to continue doing that, and I'm going to continue, inshallah, basically holding on to my basically stock. Now, of course, you have to still be careful with this company, because there are still, there's a lot of analysts are talking about it, but the lawsuit situation is still ongoing. So you really have to be careful with that. because they did settle, okay, consumer protection law for basically 75 million recently, and they basically still have the basically another 60,000 lawsuits, okay. So we will see what happens with that. Initially they were expecting this to be about $6 billion. So there are some things basically in the pipeline, or basically in terms of headwind side of things, that people are talking about, and people are saying, you know what, potentially this might be a problem for this company moving forward. But the lawsuit is probably one of the major things that is facing this company. But other than that, I really like it. It's AAA plus basically rated, which is basically the biggest any company, AAA company, which is basically the highest any company can get. So we'll see what happens, InshaAllah. I'm going to continue adding to my stock, InshaAllah, as we move forward. But if you don't, of course, but that's absolutely fine. You do your own research and you do what is best for your stocks and so on. If you're enjoying this type of content, please like the video, subscribe to the channel. Let me know if you have any questions. I genuinely appreciate every single one of you out there. Have a wonderful day. Assalamu Alaikum. Eid Mubarak.